Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This is where we get everything you need to know in 90 seconds at 9 o'clock with news the Kiwi dollar is rising as equity markets rise. The Americans are going into their long weekend holiday with some very mixed signals from their jobs market. First, the good news. The June non-farm payrolls data reported stronger jobs growth than expected before the recent virus spike. A gain of 3 million jobs was expected, but this survey shows the gain was a stronger 4.8 million jobs in June. Their official jobless rate is now 11.1%. The participation rate improved to a very low 61.5%, but that jobless rate is on the way to 14% before it shrinks permanently. But the same survey reported that those who return to work are being paid a lot less and doing much reduced hours. Both factors reduced the average work week and the average pay in June. And this data means that there are now almost 15 million fewer people employed in June than in February, with the part-time workforce double its February level. The latest weekly unemployment claims data was also released overnight, and that indicated that higher than expected level of claims last week, with prior week's data revised higher as well. There are now 19.3 million people on unemployment benefits, and most are now more than halfway through what they can claim. International trade is still a problem for the US. Exports of both goods and services fell while imports were stable, and that raised their overall trade deficits to its second highest in history. Clearly, higher tariffs aren't a solution to this long-running problem. But Wall Street is still in positive territory today, up 1.1% in afternoon trade and liking what it saw in the jobs data. They're ignoring the dodgy bits. European markets have made even larger gains today, up about 2.8% overnight. And yesterday, both Shanghai and Hong Kong recorded outside gains, although Tokyo didn't really join the party. In China, vehicle sales rose 11% in June from the same month in 2019 to almost 2.3 million units, a sharp recovery and better than expected. That caps 3 months of year-on-year gains, although it was boosted by stronger commercial vehicle sales and significant tax benefits. But the sales reported are by manufacturers to dealers, and it is not clear that the dealers are selling their growing inventories at the faster rate. There may be a coming China car crash. US Treasury 10-year yield is little change today at 0.67%. The gold price has firmed overnight, up $5 to $1,776 an ounce. And oil prices have firmed again today too. They're now just under $41 a barrel in the US, and the Brent benchmark is just over $43 a barrel. And the Kiwi dollar is firmer again, just on 65.1 US cents. On the cross rates, we're up as well now to 94.1 Australian cents, and against the euro, we're also firmer at 58 euro cents. That means our trade-weighted index has risen to 70, and its strongest in more than 4 months. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.